Hey traders, welcome to the top tier outlook for, I'm not even sure, Sunday the it's one of those days. Sunday the 19th. Hope everyone's doing great. Hope everyone has had a restful weekend and is ready for an interesting week ahead. This can hardly be called a regular trading week because what we have is, well, let's go to the economic calendar, shall we? Let's start there. And taking a look at the economic calendar, you'll see that Monday is pretty quiet. As far as RBA and Aussie monetary policy minutes, that Mon-Pol is not as big a deal. Australia, New Zealand, they have far more reactive type monetary policy. The scale of economy does make a difference. And so it's not necessarily going to echo to the US the same way the ECB or the Bank of Canada even tends to. So I wouldn't even consider the Bank of England event necessarily mapping to what we'll deal with here in the US. Say, for example, the Bank of Japan will do with the JGBs, the Japanese government bonds, that can be impactful here in the US. We've seen treasuries move dramatically on that. But for the most part, even the CB leading index, these oddball 10 a.m. low heat hot zones when there's nothing really else to consider can take on some outsized reactions. So that's just an irksome thing we need to keep an eye on, kind of a pebble in a shoe. Existing home sales would typically be kind of overlooked, and they're definitely going to be overlooked when we have the FOMC meeting minutes on Tuesday. Those FOMC meeting minutes are probably the most meaningful data we have this week. So heads up for that, because that's kind of being a fly on the wall at the most recent FOMC meeting. And that's going to most definitely be something to watch. The most important hot zone of the week is 2 p.m. on Tuesday. Moving into unemployment claims have been moved up a day. So instead of Thursday or a Friday release, because we have a half day on Friday, those Thursday ongoing claims will be released on Wednesday. And then the second most impactful hot zone this week will be the University of Michigan. Once again, because of the Friday half day, things that would be normally released on a Thursday or Friday are all being jammed into Wednesday. So probably a little bit more attention being paid, at least in the early part of the morning on Wednesday, before folks start to just phone it in for the second half of the day on Wednesday. Of course, Thursday, bank holiday in the US. And then Friday, we have a little bit of data. You can see there 9:45 and then half day. Probably the most important thing happening while the US is on bank holiday is a lot of European data. This is likely to land on bonds, on euro come Friday. So if you have positions in things like ZN or ZB, IEF, TLT, the euro, 6E, also the US dollar index, that data on Thursday, and then the ECB event 5 a.m. Friday, that's going to be specific to likely those treasuries and currencies. That's the week, gang. It's a wonky week. Monday and Tuesday are probably the only sort of fully participated sessions. Wednesday morning, I'd say after lunchtime, after the European close, we're likely to see a lot more contraction in volatility and volume. And then that's going to be pretty much the week. So heads up on that. Not a normal week at all. But here we are looking for opportunity. And this is where I would say, if I'm looking for opportunity on a week like this, which I will be, right? I will be, the swings are going to be tricky. I would rather spend Monday, Tuesday building possibly some swing entries, or just continuing to fine tune the watch list of what it is you want to continue to buy. And if you've been following along with what we've been doing here, this has very much been focused on the NASDAQ, to the long side. Look, gang, and I think a lot of you know this at this point, I have not been bearish at all this year. We've had moments in time where we've had pullbacks, but I have not in any way been bearish, because the overall trend in say, especially tech, and the overall placement of price related to where we opened, right? Except for the Russell, which even the Russell made a huge shift in terms of where price is currently and where the year began. It's hard to be a bear, gang, and be careful. I find it fascinating. There are some traders who just love to talk the bearish side. They just love to talk about, everything that's wrong and everything that's going to cause the market to make dramatic moves. And that particular niche has a rabid following. They have not done well this year. There is a path of least resistance. There is a skew to the stock market. And whether you want to accept it or not, it's fine with me. It is to the upside. All right. If you give the equity markets enough time, if you give the indices enough time, they are indeed skewed to the upside. However, it's the bears, it's the naysayers, it's the we're going to crash crowd that seems to get the most attention. I guess if attention is what you're looking for, you'll get it. If it's profits you're looking for, that's not where you want to be, because even the Russell's starting to look like it's having quite a surge. And I will tell you, that's a little surprising to me because regional banks have been as heavy as they are. The NASDAQ continues to outperform. And if you recall, we talked a lot about financials I'll tell you how long we've been talking about this. Let's go back to the Simpler Trading website. And by the way, gang, this is all stuff I put out on the YouTube channel for Simpler Trading. And, if you're looking for what mapped to where we are right now, check out, there you go. 2 weeks ago, this would have been, let's see, 2 weeks. I don't know what the date was on this, but about 2 weeks ago, wow, okay, there you go. You can kind of see it there. 2 weeks ago, I put out a video about, this would have been the end of October, about why the shifts, the NASDAQ, remember, now the NASDAQ was coming down to this 200, and we were looking at the individual sectors of the NASDAQ, the individual sectors of the S&P and the Dow. So let's start with the NASDAQ. Then we went to, most recently, hey, it's time to start looking at the S&P again. In fact, if you haven't checked it out already, and I think we have this over at the Countdown Trader, countdowntrader.com. Check this out. Let's talk about the S&P. What is it that's finally put the S&P in play as we're going into the end of the year? And why was it the NASDAQ only? And why would I entertain the S&P now? And I'm going to give you one hint. It is financials. It's the XLF. So check those things out. This is not new. This is not a 180. This is very much staying steady with what macroeconomically and even trend-wise we've been seeing. And by the way, gang, I hope that a lot of traders learned something from this year. We all have that year, myself included, where we go, oh, okay, this is how markets can react. It's not all about the dogma. It's not all about compartmentalizing and saying, if this, then that. That's not always going to be the case. And a lot of times, those if-thens aren't correct. Like, equity markets can't rally if bonds are heading lower. Wrong, right? Absolutely wrong. Equity markets have done quite well, especially the NASDAQ, despite the downtrend in bonds. And that means higher yields. They've done just fine, right? Another thing that hopefully a lot of traders are letting go is this notion that the US dollar strength will undo equity strength. Also not true. The 6E is the best way to look at the US dollar. This is what the dollar has done. Turn this upside down and you're looking at the dollar index, right? 6E and the dollar index have a very high negative or inverse correlation. And once again, I hope some of these things are not going to plague the process come 2024. These things simply aren't true, and they're going to likely continue to map to be simply untrue, which is if the dollar strengthens, equities must fall, or if yields are high, equities must fall. None of those things have been true throughout 2023 at scale. Yeah, every now and then, sure, there seems to be a reaction, but if you map things out probabilistically, those should not be things that are making you bearish. All right. Certainly, what we want to remember is, let's see, that's right. The bot's reminding me if I put a negative in front of the symbol, it'll be upside down. Oh, there's your dollar. Thanks, bot. All right. So there's your dollar. If you want to say, Rog, how do I know what the US dollar is doing? I don't have the ICE. I don't want to use DXY or UUP. I want to look at the futures contracts. Use 6E with a little negative in front of it. This is what your dollar is doing. Okay. That inverse upside down euro. All right. So as always, gang, let's go ahead and jump into the questions. And again, I'm not thinking that we're going to have a super active week in the Sector Secrets Mastery, but I think it's going to be a great opportunity as the month is winding down to regroup, to really solidify those watch lists, to manage the lingering positions in Amazon and Google that we have, and Monday and Tuesday look at some more conservative day trading. Now, I'll tell you, last week, and as much as I'll talk about when we're doing well, we had a 2.5 or 3x winner in semiconductors, and the Nasdaq we closed out Friday. So sad to say goodbye to those positions. But I'll tell you what, last week was probably one of the most challenging. It wasn't a disaster by any stretch. I ended up day trading being down 6% on the week, right? So not great. Was it 6? It was 5 or 6%. I'll have to double check my trades viz. But my swing trades were fantastic. And this is where we have to say sometimes we're going to have that negative week. I don't think it was 6%. Anyways, bottom line is I had a losing week in day trading, and that's going to happen, right? That's going to happen. We can still, as long as I don't start to add and defend and increase size and flail when the week is not working according to my sequence and follow through, as long as we can pivot, which we did with the swings, we can still have a productive week. And from Thursday, Powell Thursday, which would have been what, the 9th? Yeah, the 9th to the 17th was some of the best swing trading that we've had in probably months. Huge wins. So remember, gang, sometimes one cylinder, meaning say day trading, is going to start to misfire, while another is going to be firing away. Just make sure we're always managing both so we can find opportunity, and then just go a little bit more, I won't say all in, but go a little bit more with the style that's working. Right now, short-term overnight positions are working really, really well. So think about that. And that's what's been working for us in the mastery. That's been working for me the last week or so. All right, Anthony, love the crystal ball technique in QQQ SMH. Just kidding. Yes, Anthony knows I've joked and said my crystal ball has been in the shop for all 30 plus years that I've been trading. Do I look for bullish follow through or a stall this holiday week? I look for a lot of don't care. Right. Follow through requires attention and a reason. And I doubt a lot of traders are going to be focused on that this week. But remember, the last week of the month is next week. So whatever sort of apathy and distraction we have for the big holiday this week, Black Friday, whatever distraction we have before Thanksgiving, likely traders will be back on Monday to wrap up the month, Monday, Tuesday, Wednesday. And I believe Wednesday is the last trading day. Thursday is the last trading day of the month. So we have 4 days next week. So I would think it's going to be a lot of short term, a lack of follow through, low volume, and yeah, not a great week. So anyone out there thinking, Rog, I could sure use a week off. This coming week's the week to do it. Or what I would recommend, I've heard this term separation season. How do you separate? How do you get better while everyone else is phoning it in? How do you use this time to your advantage? This is a great time to say, you know what, Rog? I'm going to start playing around with that indicator that I took your class on and really haven't dedicated the time. Rog, it's Black Friday. I got some classes and indicators from Simpler, and it's time to put that stuff to work in a time when the market is not going to need as much as my attention. You know what, Rog? I'm going to pick your brain because you're going to be here Monday, Tuesday, Wednesday, and Friday with me, which I will be. Yes, gang, I'll be in the Sector Secrets Mastery Monday, Tuesday, Wednesday, and Friday with you all. And Friday half day. And I'm going to be doing charts and coffee every day this week. So even, yes, on Thanksgiving, what a better time to have charts and coffee than Thanksgiving. And we are so thankful for the ability to trade. And I'm so thankful for all of you wanting to be better traders. So we're going to have charts and coffee all week. And so what a better time to say, you know what? While everyone else is sort of drunk on the turkey, and I'm going to use this to my advantage and just make sure I finish 2023 really strong. So that's the way I look at it. Even though my baby sister will be in town and hopefully we'll be up to all sorts of shenanigans as she's home for a visit. All right. So I look for no, Anthony. I'm not going to phone it in, but I'm going to say what have I done well this year? What can I continue to do well to finish out the year strong? And basically, how can I serve my members? And that's going to be my focus this week for sure. It's a little bit of a reset for some of you. We're going to trade less, but study more. There's a lot of ways to use this week really productively. So that's my thought. I appreciate that, Anthony. Thank you. Kathy asks, what do I think of Goog and Amazon at the low of the 34 EMA for a longer term portfolio? Kathy, if I'm going to go long term on the likes of Goog and Amazon, I'll tell you, first of all, if I'm going to use the wave, and I would go with Google, but Goog or Google, 6 of one, half dozen the other. I have no problem with the wave on the weekly time frame for Google. Does it have to be the 34 EMA in the low? No, but I love that you asked that, Kathy. I love that you pointed that out because look at what's given that 34 period exponential moving average on the low, the red line. Look at what's given it some company. Beautiful Darvis, right? That's actually great. And you actually have a previous Darvis just a little bit above it. I love that. Yes, I would have no problem with that whatsoever. I would even say, Kathy, anywhere from the middle line of the wave, the blue line, to the bottom line of the wave, the red line would be fair game for the longer term portfolio. We could talk about that on Tuesday when I see you all in the mastery for that weekly session. Amazon, I'd be a little bit more careful. Not that it's not valid. It is, right? Not in any way would I call this invalid. Let me clean this chart up a little bit. Not in any way would I call it invalid. What I would say is that Amazon has not been as steady on the overall trend. And I got to tell you, one of the things that I did a lot less what is with all these lines here? Oh, I'm duplicating. I'm not removing. My gosh, Rog. So one of the things that I would say to keep an eye on as we go into the end of the year, I'm still a little bit more of a fan of shares on some of the ETFs, and XLY is not there, but I'd like to make sure I focus on the sectors and the shares on QQQ or SPY, XLF. But I don't have a problem with Google. Amazon, I might be a little bit more conservative on, and I can't use the wave. I cannot use the wave. Not quite. 1, 2. Yeah, maybe. Be careful. And that would definitely be something closer to the bottom line of the wave. Okay, Kathy? So thanks for the question. All right. Next up is Microsoft. 1 hour. Let's see. Again, knowing it's Sunday, but let's look at the structure. So, Mr. Walker, if I'm looking at Microsoft on the 1 hour, let's see, let's pull that up. Here's what I'd say, Mr. Walker. As I scan XLK, XLY, XLC, XLF, the indices, I'm actually going to prioritize trends first. So saying yes or no to Microsoft is really a matter of not just looking at it, but looking at a number of other symbols, whether in the NASDAQ or in tech, and saying, well, is there any other symbol that has a trend? Well, yeah, Apple does. So while Microsoft is in the range, agreed, and that's a fine level to look at, the daily price movement range, our DPMR gray zone, beautiful, oversold, that's perfectly valid. But I want to make sure that before I go into one symbol, I've looked at a much more complete view of the market, and I'm choosing that symbol not simply because it's available, but because it's a setup that I would be okay risking my money on. So it's a difference between, is this a choice or is this a lack of options, right? And so I don't know that until I go through the process of scanning through all those names. But I wouldn't rule it out. It's a beautiful daily price movement range setup. But I also know that I have a trend in Apple, and that might be, prioritizing trends is a bigger deal to me than simply having the setup. That might be the better setup. And by the way, we want to look at Meta. We want to look at Amazon, Google. We want to look at Tesla. We want to look, well, Tesla, yeah. We want to look at NVIDIA. We want to look at the sectors, XLK, SMH. I don't want to forget financials. I want to make sure I'm looking at the S&P. Look at financials, right? What looks even better than Microsoft and Apple even? Financials look great. And then I could say, well, what about JP Morgan? JP Morgan looks great. So I've got to be open to scanning a number of symbols to say, as I put together a list of things that deserve my attention and therefore potentially my capital, I really want to prioritize trends. And as long as I do that first and then go to non-trending markets second, I'm usually going to be better off. All right. Let's see. Peter, I just want to say you make day trading easy. You make day trading easy. Cool. As I like to say, Peter, world's most boring day trader. So I appreciate that. Thank you, Peter. We have a lot of fun doing it. And look, gang, I like to be really upfront with you all. If I've had a good week, I'm going to let you all know. If I had a challenging week, also I'm going to let you all know, because if I don't let you know, then you might be banging your head against a certain style saying, well, why isn't this working? And frankly, if some of you say, oh gosh, Rog's challenged with this too. Oh, cool. I'm not alone. It's not me. This is a challenging market for day trading, not for swing so much, but for day trading. So I appreciate that, Peter. Thank you. How are you, Yee, my friend? How are you? We're looking forward to making the most of the upcoming shorter week. CL has been in a downtrend. USO. Okay. So yeah, crude oil has absolutely had an about face as we go into the latter part of the year, that Q3 to Q4. And could we look for a short? Yeah, we have to. And you're mentioning USO. What would our trigger be? You're mentioning the 62 on USO. Oh, as far as a target? We have a couple choices here. Daily price movement range, the 34 EMA on the low, but are we going to head down to 62? Am I misunderstanding the question? USO for a long-term. So I can't buy USO yet. But when you say long-term, that leads me to believe, Yee, that you're looking at the weekly. All right. So if you're looking at the weekly for a potential buy, you know what, Yee, I'm not sure that I'm understanding the question there. Yeah. Longer term. Yeah, I can't do that yet. No, but 62. I think I get where you're coming from there. What's 62? Yeah, what's 62 that's catching your eye? I don't mind the weekly, but again, I'll say the same thing that I've always done. The 200, how about 70? I'm going to keep an eye on 70. My problem is I can't be this aggressive. It's neutral. Yeah, I think it makes sense to wait. Yeah, I like what you're thinking about longer term. When is Crude going to start moving higher? I'm with you there. I think it's a little soon, right? Did I answer the question? So I think it's a little soon. I totally hear where you're at. We're shifting. The weekly is testing the 200. We've closed this little gap down in here again, almost. I don't know, Yee. We got to wait. But let's put it on the radar. Let's keep watching it. Let's put it on the radar. All right, gang. Sorry I ran over a little bit, but I'll see you all tomorrow for Charts and Coffee, 9 a.m. In the meanwhile, enjoy the rest of your weekend. Those Niners fans out there, like the bot, they are just crushing the Bucks. And I guess the Bill fans are pretty happy. Those are the two games that are playing right now. I don't know how many of you watched the F1 race. It was playing at 1 a.m. I did catch it. It was pretty surreal to watch them racing through Las Vegas. A lot of passing lanes. Good race for sure. Have a great one, gang. Enjoy the rest of your week, and I'll see you tomorrow morning for Charts and Coffee.